Google and Tesla just put out their earnings reports just about a couple hours ago now. And wow, this one's going to be an interesting one. I think a lot of people just thought the stock was just going to keep going up and up and up and up. And we're seeing after hours, Google's down 2.69%. Tesla's down about 4%. We have a lot to go over. So without further ado, let's go ahead and get right into it. Now, very clearly here, Google had an absolutely smashing hit in terms of expectations versus reality. They did spend a lot of money, and some people were a little bit scared surrounding it. I think it's a little bit of an overreaction, but let's get into it. So Google made $99 billion in equity gains inside their quarter two profit. Pretty big. It's regarding Anthropic and their SpaceX stakes. They made a lot of money, a heck of a lot of money. And they have net income printed $112 billion on $119 billion revenue. Very big deal. It's a 217% earnings per share beat. It's pretty insane, actually. I think it was like $2 something, $2.50 or something per share. And they reported $9.11. $9.11. However, you unfortunately haven't actually cashed out on any of this. And so about 2/3 of tonight's headline profit is a mark on shares Google cannot sell yet. Okay, so that's interesting. What is the reason for this thing to go down? The earnings per share was strong. They have had investments into SpaceX and Anthropic, which both are mooning. And so from an investment perspective, Google's absolutely crushing it. Why would the stock be going down? Well, let's keep going. So the real quarter, cloud is accelerating, just growing. This is Google Cloud revenue growth. It's absolutely crushing it. As you can see here, it was up 32%, then it was up 63%, and then it was up 82%. Very big deal. AI was supposed to kill this business. A lot of people thought that Google search was going to die. And in fact, it actually ended up growing instead. Deepwater's Munster says Google is converting AI overview traffic into search revenue. And so they're actually making money, surprisingly, off of the AI craze. In fact, they had an absolutely crushing beat. YouTube ads are up 13%. Their subs are up 15%. Really, their business is absolutely crushing it. Absolutely crushing it. Now, a lot of people are predicting the reason for the earnings report going down. One of the reasons, at least, is that the market pretty much was expecting this. 96% of people were already pricing in a beat here. And, there were 57 buy ratings. There were 7 hold ratings. Really, everyone was expecting this to happen. Most of the market was going ahead and predicting it. Now, with this being said, why in the world is this stock going down? Well, in my opinion, it's their cash flow. They don't have as much cash flow as we thought. In fact, if we look at pictures of their cash flow, very simply put, it's not the best Google. It's not the best in the world. They for the first time ever, pretty much reported negative free cash flow. Not great. Not great. And so people are kind of pricing this as the reason why the stock is down. While, yes, the earnings per share is very strong, people are kind of freaking out surrounding this specifically. Now, I think a lot of it is kind of, in my opinion at least, a little bit just emotional. I think people are just seeing this and saying that the AI trade is over. However, the reason that Google's been able to get these great investments into Anthropic, SpaceX, et cetera, is because they're able to raise cash very easily. And if you know anything about the AI race, you know that in essence, you have to spend a lot of money to be able to make a lot of money. The reason that Google's revenue is up as much as it is because they've been spending a lot to build and be competitive against some of the other AI competitors. Now, their balance sheet was like pretty much ridiculously bloated with cash and short-term investments. And these will be able to easily fund whatever capex increases they have. They've got about $180 billion to $190 billion worth of capex. They're going to be spending a heck of a lot of money. And a lot of people are concerned surrounding that. Is Google going to be able to sustain the innovation and the rate of growth that they've had? And so that's kind of why Google has been going down. There really is an AI arms race happening right now. And this is, in my opinion, the big reason for it. However, give it a month or two, and this is going to bounce right back. Google's going to keep making cash hand over fist, and the stock is going to recover and do better. And so I'm not really honestly concerned over this Google earnings report. I know I've seen already a couple takes on this being like a very bad thing. Oh my God, we should be freaking out. However, as it stands, it's looks just fine. It looks fine. And in fact, Google's making a lot of money, and they're just going to keep making more and more and more and more. So let's get into the next one. We have Tesla, which had a record quarter. Now, a lot of people were concerned in regards to their margin. People were expecting Tesla to make a lot of money. Nobody was questioning that. However, their gross margin, not really as good as we were expecting it to be. There is a risk right now on Tesla's own list. They have lower selling prices, fewer regulatory credits, higher AI spend, and energy warrant charges. While Deutsche Bank says the delivery record itself was bought with financing offers and incentives. In fact, I've seen a couple of my family members, friends have gotten Teslas because of just how cheap right now the APR offers are. Like Tesla's not making that much money on their customers versus how they were making money before. It's kind of like the real estate market in Miami. The real estate market says it has the same prices, like you're paying the same monthly, and properties are going for kind of the same, but there's so many incentives that bring the price down that it's not actually realistically going for the price that it says it's going for. And so Tesla's kind of going through the same thing. Their free cash flow is also down. Their earnings per share was also a bit of an upset, to be completely honest with you. They were the stock, in my opinion, that was hit harder than the latter. Google performed very well. I think Google stock is going to be perfectly fine. And in fact, I'm exploring buying Leaps, expiring in 2027, because it just feels like that stock's just going to keep running and running and running, and it just makes a lot of money. But Tesla's the one that's a little bit more concerning, because as their gross margin suppresses, it's going to take more money to make more money. And it's going to take increasingly more, especially if their margins aren't as high as really people were expecting it to be. I would say Google is definitely the much stronger buy, relatively speaking, against Tesla. And I think people are really going to be looking forward to what's going to be coming here from Microsoft and Amazon later this month, really to tell us just how crazy the spending is getting. Because really, a lot of these AI companies are spending a lot. Not all of them are going to be able to sustain this long term, and those that can will be the ones that win. The good thing for Google is that they have these big investments that they can cash out at some point or another to be able to increase their cash flow. And they're also just making a lot of profit in general. They really are just going ahead and doing it in general. We're going to have tomorrow night Intel. We're also going to have, in about 6 trading days, NVIDIA. In August 26th, we're going to have a big day there. NVIDIA is expected about $2. And so we'll have to see what happens with NVIDIA. But right now, Google is giving us some pretty good signs. I think so. I think people are kind of overreacting here, and Google's going to be perfectly fine. Let me know your thoughts. I'll see you all later. If you found some value off this, subscribe, and that's all.